Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 298 on November 25th, 2023. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Peloton Interactive, Vale SA, and the Semiconductor 3X Bull ETF, and we discuss three new trades on Spirit Airlines, HP Inc., and Roblox Corporation. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. And for anyone that wants to learn how to trade options, or just to simply get better at how they're already trading options, we've launched the Weekly Option membership group. The group features video training that can be accessed online when it works best for your schedule. There's daily interaction with me and other traders in the group through a group chat, and there's ongoing videos and webinars to make sure everyone is up to speed and gets the help they need. This is a community of option traders that can support you in your growth. Email me immediately if you want to learn more about this group, and we'll definitely have a phone call. So the equity markets finished the holiday week 1% higher. The Dow Jones Industrial Average grew 442 points, closing at 35,390 points. The S&P 500 index grew 45 points, ending the week at 4,559 points. And now it's time for the topic of the week. The topic of the week is probability for option spreads. Now, quite a while ago, I discussed the information embedded in an option price. Today, I want to discuss some of the information embedded in option spread prices. When you look at option spreads, the difference in pricing for two options, of course, the price includes a number of built-in probabilities around the likelihood of the options finishing in the money. Oftentimes, I look for trades where I pay $2.50 for a $5 spread. That means I can make $2.50 profit on that trade. And I have a decent return or a decent amount of wins from taking on trades just like this, but it certainly makes for a much more stressful trading day. Anytime you can double your money, you're taking on a lot of risk, even if it doesn't feel like it. Now, I used to see these trades as high probability, and even though I still like them, they're not high probability trades. The market is telling me that there is as much likelihood that I will lose on the trade as making money on the trade. That means if I lose all of my capital. So that's pretty high risk. Lately, I've started leaning towards spreads where I pay $3.50 to make $5. That means a $1.50 profit. Even though it's less money, the market is pricing it as a higher probability trade. That's a 70% likelihood of finishing in the money. If you go deeper in the money, you can pay $4 to make $5. That's a $1 profit. The market is essentially telling me that the spread is 80% likely to finish in the money. As I take these factors into account for my trading day, it allows me to allocate my capital and size my trades with a better understanding of the likelihood of finishing in the money. If I look to sell a spread, I'll be paid more money for selling an in-the-money spread. However, there's a much higher likelihood that that spread will finish in the money. That means I would lose the full value of the spread, and my loss would be the difference between what I was paid for the spread and the full value of the spread. It's just not worth it. That's why I focus on selling out-of-the-money spreads here on the show. I use this strategy in real life. So for those of you looking to trade spreads, just remember to consider what information is embedded in the price of that spread before you enter the trade. It might help you increase your profit and possibly reduce the stress of your trading day. So let's get into the trading review of last week's trades. And I feel like this week was just kind of super okay, which I'll take. We've had some crazy weeks before. I'm happy with super okay. So We'll start off with the covered call on Peloton Interactive, symbol P as in Papa, T as in Tango, O as in Oscar, N as in November. At the time, the stock was trading for $5.52 per share. We looked at buying stock and selling the December 6 call at 27 cents, hoping for a return of 13.59% in 4 weeks. Well, shares of Peloton fell 25 cents, ending the week at $5.27 per share. The call option we sold lost 12 cents, leaving us with a net loss of 13 cents on the week. We could roll the strike of the call option lower by buying back the 6 call and selling the $5.50 strike at 26 cents. This would give us an immediate gain of 13 cents on the week, but we will have also traded off some of the upside we could have had in the stock, which means your overall return is going to be lower. So I would definitely lean towards not making an adjustment just yet. This stock could easily pull higher in the next few weeks, allowing this trade to mature to full profit. With 3 weeks left before expiration, we don't have to make any decisions really quickly on this one. We'll see how the coming weeks unfold. Our next trade was the credit spread on Vale SA, symbol V as in Victor, A as in Alpha, L as in Lima, E as in Echo. At the time, the stock was trading for $15.14 per share. I looked at selling the December 14 put spread at 40 cents, which could give us a maximum possible loss of 60 cents per spread. Well, shares of Vale lost 8 cents, ending the week at $15.06 per share. The out-of-the-money put spread we sold is still out of the money. You could actually buy the spread back for a 6-cent gain, but that's kind of pointless when you consider commissions for executing the trade. And at the moment, we are still above the break-even point. So when we sell spreads, we want them to depreciate and ultimately expire worthless. Even though the stock lost 8 cents, the price is still above our short put strike and the put spread lost value. This trade is heading in the right direction at this point, so no adjustments are needed at the moment. Our final trade from last week was a debit spread on the Direction Daily Semiconductor 3X Bull ETF, symbol S as in Sierra, O as in Oscar, X as in X-ray, L as in Lima. At the time, the stock was trading for $23.15 per share. I looked at buying the December 22-23 call spread for 62 cents. That could give us a maximum gain of 38 cents or a 61.29% return in 4 weeks. Well, shares of the Semiconductor 3X Bull ETF lost 8 cents, ending the week at $23.07 per share. The in-the-money call spread that we bought is still in the money. The rally slowed a bit, so our call spread lost a little bit of value, but not too much. Still, it's fully in the money and well above the break-even point, so this trade is definitely working out so far. No adjustments are needed on this one either. That's it for the review of last week's trades. We are pulling into our final week of November, and soon will be well into the last month of the year, so right around the corner. Of course, all the new trades on today's show will use the December 15th expiration for December options. So with that being said, let's dive in. We're going to start off with the covered call on Spirit Airlines, symbol S as in Sierra, A as in Alpha, V as in Victor, E as in Echo. The stock ended the week at $13.02 per share. I'm looking at buying stock and selling the December 13 half call at $1.40, which could give us a return of 14.44% in 3 weeks. Now you enter this trade by buying stock for $13.02 and selling the December 13 half call at $1.40. This trade makes the most money if stock prices finish above $13.50 per share. The break-even price on this one is $11.62. In real terms, the stock purchase would require $1,302 and you'll collect $140 for selling the option. Next up, we have a credit spread on HP Inc., symbol H as in Hotel, P as in Papa, Q as in Quebec. The stock ended the week at $28.64 per share. I'm looking at selling the December 28 put spread at 19 cents, which could give us a maximum possible loss of 31 cents per spread. Now you enter this trade by selling the December 28 half put at 54 cents and concurrently buying the December 28 put for 35 cents. This is a credit spread because we are selling the spread. This trade makes the most money if stock prices expire above $28.50 per share. The break-even price on this trade is $28.31 per share, and in real terms, you'll receive $19 per spread that you sell and have $31 at risk. And then our final trade on the week is a debit spread on Roblox Corporation, symbol R as in Romeo, B as in Bravo, L as in Lima, X as in X-ray. The stock ended the week at $38.12 per share. I'm looking at buying the December 37.5 38 call spread for 30 cents, which could give us a maximum gain of 20 cents, or that's a 66.67% return in 3 weeks. Now you enter this trade by buying the December 37.5 call for $1.78 and concurrently selling the December 38 call at $1.48. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $38 per share. The break-even price on this trade is $37.80, and in real terms, you'll pay $30 to enter the spread, and your maximum gain is $20 per spread. So that's it for this week's show. Thank you guys so much for listening, and thank you for those of you who share the show as well with your friends and family, or those who want to trade options. And I appreciate it to all of you who email me. I do owe a few of you emails. I slowed down for the Thanksgiving holiday. By the way, I hope those of you in the U.S. enjoyed your Thanksgiving, and I hope everyone is ready for a good final month of the year. So let's finish this year out strong. Have a great weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.